Weak ringgit is a bigger problem today than it was 2 decades ago. Economists argue that a sustained depreciation of the ringgit would worsen imported inflation, affecting the purchasing power of households and businesses. The trend of de-dollarization presents Malaysia with opportunities to strengthen the ringgit and boost its capital market. Careful navigation of this transition holds the potential for increased economic stability, greater financial independence and resilience. I'm Manita Wu, and this is Money Matters. Good evening. Welcome to Money Matters on your favorite channel right here on TV3. We're also available on HD via Tonton. Joining us today is Sri Abdul Wahid Omar, Chairman of Bursa Malaysia. Welcome to the show, Sri.
Thank you, Anita, for having me here.
We'd like to start with the discussion on Budget 2024. It's been a week since the Prime Minister has announced and tabled it. What are your views on the budget?
Well, perhaps from three perspectives. I think firstly, as you know, globally there are some challenges, and it is important for the government to undertake whatever measures to spur the continued growth in the economy. So I'm happy that the budget that was tabled has a record 393.8 billion ringgit, and that will help to sustain the economy. So obviously for 2023 we're talking about 4% growth, and next year between 4 to 5% growth. And within the context of global growth at 2.7%, I thought that's actually credible. Secondly, in terms of the need to maintain fiscal discipline and responsibility, happy that despite being an expansionary budget, the government remains committed to reduce the fiscal deficit from 5.6% last year to 5% this year, then down to 4.3% in 2024, and thereafter to move towards the 3% target for the medium term. And I think that's something which I think most analysts do welcome. And to do that, obviously, you need to look at both the revenue and the cost side. So I think on the revenue side, we do welcome the broadening of the revenue base, and that includes providing that clarity on the capital gains tax. A lot of people have also been asking for GST.
Yes.
It's not there, but the government did increase or proposing the increase in SST from 6 to 8%. I think that will help to add some revenue and broaden the base. At the same time, on the other side, looking at rationalizing subsidies and to curb leakages and so on. So I think that will help in terms of containing the fiscal deficit. And the third element, if I may, in terms of the commitment to sustainability. I think there are many angles there. I think one of the things which I like was the 2 billion ringgit, the Energy Transition Facilitation Fund. I think that's great, and that's in support of the National Energy Transition Roadmap. Secondly, in terms of the biodiversity sukuk of up to 1 billion ringgit, yes. I think that's great. And the commitment to further conservation in terms of, among others, boosting the number of rangers to 2,000 strong. I think that's important. And of course, for us at Bursa Malaysia, we're happy there is that 300,000 ringgit allowance given for companies that embark on carbon credit.
The PM recently said the value of the Malaysian ringgit, I mean, that's a hot topic, would improve by year end with these clearer policies in terms of economy and investments. The Premier was also confident that the sound strategies and policies of this budget would strengthen the economy and the ringgit. Can you explain how these specific initiatives in Budget 2024 aim to promote the use of the ringgit, especially in terms of regional and international trade, and hopefully reducing the dependence on the US dollar?
Wow, Anita, that's a tough one.
It's a broad one.
Very topical, certainly. So I think, obviously, one will have to look at the longer term in terms of how trades are settled. So I think it is, in my view, important for countries that trade with each other, by right, they should, as much as possible, use each other's currency for trading. But I think, unfortunately, in today's environment, most countries denominate their trade in US dollars. And that has created a significant demand for US dollars, not just for settlement, but also for central banks, for example, to have a sizable portion of their reserves. In US dollars. Now, I think the first step will be to perhaps reduce over-dependence on dollars as a settlement and reserve currency. And this is where we should encourage all countries to denominate the trade in their respective countries. And in the context of Malaysia, I think it's great that the Bank Negara has already made arrangements for bilateral payment arrangements with China, Indonesia, and Thailand. And hopefully that can be broadened further. Again, hopefully it'll be followed by the rest. So if you look at our trade balance, so naturally ASEAN or intra-ASEAN trade is actually most significant within our context. And then China is our largest trading partner too. 16 to 70% of our trade is actually with China. So I think if you can start with this and then it can spread to other countries, that will help tremendously.
So specifically, these measures, how will it strengthen the ringgit?
Well,
the demand.
Because people tend to look at the ringgit valuation relative to US dollars. Right? So when you reduce your over-dependence on US dollars, naturally ringgit will strengthen. Now, if I may, Anita, at the end of the day, the strength of an economy will be measured in terms of its growth and its ability to sustain itself. And what I mean by that is that looking at our trade position. Now, Malaysia has got a strong economy, by right? And in terms of trade surplus, if you count, we have had 24 years of continuous trade surpluses. And to the tune of 2.7 trillion ringgit. And after you take into account the investment account, so the current account surplus in our balance of women amounted to 1.5 trillion ringgit over that 24 years period. Now, any country that's growing by 4.7% per annum and having that current account surplus of 1.5 trillion ringgit, by right, should have their currency strengthening. Thank you.
We're going for a quick commercial break. Do stay tuned for more discussions on the ringgit. Welcome back. You're watching Money Matters with our guest, Sri Abdul Wahid Omar, whom we're very pleased to have in studio with us today. In continuation of our conversation earlier, Sri, let's move on first to the topic of capital gains tax and how it will be implemented next year. How do you see this benefiting Bursa? What do you see its knock-on effects?
Well, in the first place, it's great that the government provided clarity on how that's going to be implemented. Yeah. It is very clear that it will not apply to listed shares. And there are also exemptions under three circumstances. One, in respect of companies going for IPO. Mm-hmm. Secondly, in terms of companies undertaking their internal restructuring. And thirdly, in terms of gains for venture capital firms. Yeah. So I think in that way, it provided clarity. And what that means is that for many large companies that are currently still in private hands, this will give them that incentive to take the company for listing and allow public shareholding to come into their company. And hopefully, over time, there'll be more companies going for listing, if I may. Yeah. And that will help develop the capital market.
Yes. Now, as chairman of Bursa Malaysia, what measures are currently in place to ensure that Bursa Malaysia operates efficiently and transparently, especially in terms of boosting investor confidence and hopefully strengthening the ringgit?
Well, obviously, Bursa Malaysia, we play a triple role, if I may. One, as the frontline regulator. Secondly, as the marketplace, where we provide all the trading and settlement systems. And third, in terms of Bursa Malaysia being a public listed company itself. And we always operate by the highest standards of corporate governance. And I think for the marketplace, it is supported by our various listing rules, which are updated from time to time. And obviously, in recent times, we've also issued the revised framework for sustainability reporting too. Now, in terms of how we govern ourselves, in order to manage the potential or perceived conflict, our regulatory function is undertaken by a committee. We call it the Regulatory and Conflicts Committee, where it used to be chaired by me, but now it's actually chaired by someone who's actually independent. And the members of that committee, the majority are independent members, including the chairman. And as you know, we're now working towards transferring that to a regulatory subsidiary. So overall, we are very clear that we always observe the highest standards of corporate governance, both as a regulator as well as a PLC ourselves. Now, in respect of the market, so naturally, with the clear and transparent rules, we do hope that there will be more and more companies coming to the market. And being the marketplace, our role is to provide that platform for companies or businesses and investors to meet. So the idea would be for businesses of any size to come to the market to raise financing to enable them to grow.
Could you elaborate on Bursa's strategies in terms of that, specifically to attract more IPOs and to attract more foreign investments as well in our local equities?
Right. So, so back to that marketplace. So we have the LIP market, we have the ACE market, and the main market. So for smaller companies which are fledgling, so we have the LIP market, where the investors are confined to sophisticated investors. But for those companies that are ready, they'll go into the ACE market, where participation will be wider. And of course, for the more mature companies, there'll be that main market that they go to. So again, truly living up to our purpose of being the marketplace, this is actually where companies come to be listed, raise financing for them to be able to continue to grow. And when we talk about investors, naturally, they come, we're talking of both domestic and foreign investors, retail and institutional. So again, as wide as possible, and to make sure that those investors will have good access to our market.
Let's touch more on that, actually, in terms of foreigners buying into local equities. Unfortunately, over the past years, we've seen them selling more than 3 billion ringgit on Bursa. So what's your strategy in terms of tackling this issue and kind of wooing them back?
Right. So obviously, foreign institutional investors, they have the benefit of moving from one market to another. So they have a choice. And indeed, in the first half of this year, we saw selling to the tune of 4.2 billion ringgit. But that trend was reversed in the third quarter, where we've seen 2.2 billion ringgit of net investments from them. Obviously, in October, circumstances have changed with continued uncertainty, especially what's happening now in the Middle East, and continued dispute with China and so on, with America. So we've seen some of them actually exiting the market. So we've seen, I think, probably about 1.7 billion ringgit of outflow in the month of October. Now, those are situational, and I think on our part, what is most important is actually for us to make sure that we put in place the infrastructure, the rules, and companies of quality for them to invest in. And this is where we believe that, with the current situation, there are some areas where there could be better improvements in terms of performance by some of our companies. So that's why last year we embarked on the PLC transformation program, providing some guidance for companies how they can improve their performance and being purpose and performance driven, for example. And the idea will be, as they improve their performance, they will become more attractive. And again, in the longer term, that's when we get the foreign investors to come in and invest in them.
It sounds like a robust framework so far, and
Indeed,
hopefully we will woo them back. A question on the increase of SST on brokerage fees from 6 to 8%. Do you think there'll be an impact?
No, I think it's relatively small. So I don't think there'll be any disincentive for investors to trade, so to speak. Yeah. So.
And what about promoting more listings of large tech companies? Do you see that as a trend going forward?
Yes. So we promote the listing of companies of all shapes and sizes, and naturally, technology is actually one of them. So if I may, in terms of number of listings, we had some 35 companies listed last year. This year to date, we have 27 companies. That would include some companies that are involved in the technology sector and the electronics manufacturing services sector, and so on. So again, the idea would be to attract companies of all shapes and sizes, so to speak, and including technology. And of course, those companies involved in technology, they tend to get the better valuation and they're better traded.
Good to know. Thank you very much, Tan Sri. We're going for another short break. We'll have more in-depth discussions with Sri Wahid Omar right here when we return. Stay tuned. Thank you for staying with us here on Money Matters, and Tan Sri Wahid Omar is still with us. All right, Tan Sri. So most ASEAN countries are currently trading near their lows for the year against the surging dollar, including, unfortunately, the ringgit leading the decline this year. I mean, within the greater region, we are just behind the yen. So, Tan Sri, if we can have your thoughts onto the weakening ringgit, can you tell us if is it just weakening against the USD? Is it just a factor of the USD strengthening, or are there other domestic factors that are contributing to it? And what do you think we can do about it?
Well, there are multiple factors. I mentioned earlier about the trade flows and investment flows. So investment flows refers to both FDI and DIA, so foreign direct investment and direct investments abroad, as well as the portfolio funds flow. And then you also have this issue of foreign workers remittances, which are not small. So they can be from 26 billion to 31 billion ringgit per annum too. And then there's also the issue of interest rate differential between our currency and US dollars and others too. So I think, again, it's multiple factors, I would say.
What do you think we can do about this in terms of where our standpoint is right now?
Yeah, so I think in the shorter term, obviously, we leave it to Bank Negara to actually manage the flows. But I would like to look at the medium term and longer term. So we spoke earlier about the 1.5 trillion ringgit of current account surplus. And that is after taking into account your primary and secondary income, meaning that it includes your foreign workers remittances, and it also has taken into account the payment of dividends and so on, right? So still, 1.5 trillion is a lot of money. Now, why is it not translated into actual flows? And it's because not all exporters convert their export proceeds into ringgit. And based on the last figure I saw, the range, as disclosed by Bank Negara, is only between 60 to 70% of the export proceeds are converted into ringgit. So they are brought back into the country, but they remain in foreign currency.
So they have to hedge for their own sake?
No, I think there is that opportunity. So if you have to import, it's fine. But net. So if all of us were to truly keep our currency based on our requirements, so net, there should be that 1.5 trillion ringgit after 24 years, right?
Indeed.
But it's not there. So I think this is where, again, perhaps, compelling exporters to convert at least 75% of their export proceeds within 6 months can be implemented. That's something that we imposed in 2016 when we had the similar financial market turbulence.
Right.
So that was actually in place, but it was actually reversed in 2020.
Let's go on a little bit more about the depreciation of the ringgit, which has naturally triggered alarm bells and is expected to continue to slide further following any decision from the US Fed to continue to increase interest rates. So briefly, as you said earlier, this is more of a central bank policy, but what do you think could be done to minimize this impact? And more importantly, how long do you foresee this carrying on? Do you think there will be a point in which we'll say, okay, we've got to do things differently now? Do you think it's just short term? Where do you see the tune changing?
Well, sorry, Anita, I'm afraid I don't have that crystal ball. Until recently, I think most economies were expecting the interest rate to be reversed, so meaning that we're really seeing a peaking of US interest rates. And that was up to as recent as a few weeks ago. But now circumstances have changed. I think with the geopolitical situation that we have, in particular in the Middle East, and that's causing some other pressures too. So I think more recently, I think we've seen the American authorities saying that they probably see the interest rates remaining higher for longer. And that's, my view, is actually not good for the global economy. Because, as you know, high interest rates tend to cause contraction in some economies. But it is our belief that it will not be forever. So I think there'll come a time when, as the economy slows down, demand starts to come down, then they'll start be looking at reducing interest rates too. Again, for how long, we don't have that crystal ball. But what is important is for us to remain focused on the fundamentals, right?
Yes.
Do what we have to do domestically, grow the economy, in terms of even our interest rate policy, make sure that the monetary policy is suitable and that suits our requirement domestically, instead of following others as well. And that's something which I think, look at the track record of Bank Negara, they have been very good and solid.
Yeah, they've been solid. Thank you so much for your wonderful input. Despite not having a crystal ball, that was very honest and forthcoming. Thank you very much, Sri Wahid, for being here with us.
Thank you, anytime.
For the past half hour, you've been with us on Money Matters. We will be taking a break from next week on, and we'll return with our new season 3 months from now. Until we meet again. If you missed the earlier part of this episode, you can also catch up on Tonton. I'm Manita Wu. Thank you for watching and have a good weekend ahead.
Where the Sarawak government has to invest quite a huge amount.
Stay with us and we'll be right back.
It's about putting our views forth, and it's about speaking up for the industry.
Money Matters is going for a short break. Don't go anywhere.
Is that we want to see that we are moving toward that.
So don't go away. Money Matters. We'll be back shortly.
So I'm happy it has a record 393.8 billion ringgit.
I'm Manita Wu. Thank you for watching and have a good weekend.
I'm Zahir Kelvin Abdullah.
I'm Azaria Tagaya.
I'm Muhammad Hamdan.
I'm Manita Wu.
And this
is Money Matters.